Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording. It is 3:27 p.m. That is Central Time. Today is May 2nd, and today being Friday, it's the big picture, long-term audio and video for the various different asset classes. Well, I thought that one of the most significant moves we had this week was in the Taiwan dollar, and it jumped higher in here today. So there was a clear reason for that, and it's the potential that China is becoming a bit more amenable to the potential for talks with the USA. There's been some talk that perhaps they will crack down a bit more forcibly on the components that are used for the production of fentanyl, particularly by the cartels in Mexico. And then there's also the potential that or at least there is talk that they have already reduced tariffs on about a third of the goods that come from the USA. So there's certainly the potential here that we are at least having talks about talks. Now, the stock market took that as a clear sign that there is the potential that all of the angst about tariffs isn't going to be long-term, but is perhaps has already peaked, and we had a sharp rebound on Wall Street. This was a 90% upside day. So certainly we had a little bit of weakness in shares like Apple and Amazon, but just about everything else went up. Then we had OPEC come out and say, well, we're bringing forward our expectation for when we're going to increase supply by about 400,000 barrels a day. And oil initially sold off and then popped back up again. This was a firm day for natural gas as well. So perhaps the best, or at least the clearest upward dynamic we've seen for natural gas in quite some time, and bouncing from the region of both the 200-day and the 1,000-day moving averages. Then when we think about what else is going on here, well, with the stock market doing well, and then the sharp rally for Taiwan was very clearly suggesting that it would benefit from the reduction of tariffs. Well, the dollar was also a bit steadier in here today, and then it was supported largely by the jump higher in treasury yields. And I think that's a significant development because the aspiration of the Trump administration is to get bond yields down, but the bond market is not playing ball. So we have several competing themes that are vying for the attention of investors right now. And I think it really would behoove us to take a big step back and to think about exactly what's going on, particularly as it relates to hard assets